Thank you all for joining in for today's call. I'm joined by Mr. Alap Patel, Executive Director, Mr. Harsh Patel, Non-Executive Director, Mr. K.V. Unnikrishnan, CFO, and Mr. Nilesh Ganjwala, Senior Advisor to the company. On Friday, 17th September 2021, HLE Glascoat announced the signing of definitive agreements to acquire the global business of Saletec GmbH, Germany, as well as its 100% subsidiary Saletec USA, as a part of its strategy to strengthen its position further in the global markets with innovative technology. Pursuant to the acquisition, Saletec will become a wholly owned subsidiary of HLE Glascoat, with the entire business of Saletec being consolidated into the company. This is indeed a historic milestone in the journey of HLE Glascoat. Saletec is engaged in the business of manufacturing specialized process equipment and reactors and has its manufacturing facility in Germany. It is a market leader in the glass-line equipment business in the highly sophisticated market of Germany. Saletec offers sophisticated, customized, and innovative technical solutions with glass lining equipment and services in the chemical, pharmaceutical, and environmental process industries. Saletec has its headquarters in Thale, Germany, with 2 additional service centers in Germany and a business development and service center in North Carolina, USA. Saletec operates a 40,000 square meter manufacturing facility with more than 160 employees. The facility has capabilities to manufacture equipment with dimensions of up to 100,000 liters volume. The facility is equipped to work with carbon steel, stainless steel, nickel-based alloys, and other materials, and of course with specialized glasses. Since both HLE Glascoat and Saletec are engaged in similar and synergistic lines of business and operations, incremental improvements in the operations of the 2 companies are expected. The acquisition will enhance efficiencies and combine the similar business interests for both the entities, resulting in operational synergies along with streamlining and optimization of the businesses. It would also lead to administrative efficiency and optimal utilization of various resources and provide a common leadership vision for the consolidated glass business, economies of scale, and integration of processes. HLE Glascoat intends to provide its global expertise and management capabilities to ensure the growth of Saletec, primarily through increased focus on expanding territorial coverage, improving competitiveness, and greater penetration of European and American markets. In 2 months, the company intends to use the marketing and post-sales network of Saletec to promote and market various additional equipment manufactured by the company to increase the product offering of Saletec to its customers in the same user industries. The 2 companies would use each other's manufacturing technologies and expertise to bring about commonality of the product specifications in India and globally. The acquisition is in line with the company's strategy to expand its footprint globally and reinforces its position as a market leader in manufacturing innovative and specialized process equipment, customized solutions and systems, and would also result in overall value accretion to all the stakeholders. Coming to the terms of the transaction, HLE Glascoat will purchase 100% of the equity shares in Saletec, and the consideration will be euro 12 million payable in cash. Thaletech will continue to have its distinct brand identity and remain a separate business entity post the acquisition. After the acquisition, one of the founders, Dr. Reinmuth, will continue to act as the managing director of Thaletech, and the other founder, Mr. Bergman, will act as advisor. Coming to the financials of Thaletech GmbH, it clocked a revenue of euro 26.27 million, EBITDA of euro 2.56 million, and a PAT of euro 1.33 million during the year ended 31st December 2020. Based on these audited financials of Thaletech, the deal is at an EV to EBITDA multiple of 5.1x and price to earnings multiple of 9x. With this, we will now open the floor for questions and answers. Thank you.
So shall we open the floor for questions?
Yes, I think so.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Kaushal Shah from Danki Securities. Please go ahead.
Yeah, thank you very much for the opportunity, sir, and congratulations for the acquisition. So if you can share a little more color on the acquired company, Thaletech. What is the kind of position they have in Germany and the market share? We have, of course, written that it is a market leader. So, and also about the total market size, maybe not just in Germany, but even in the European region where potentially the company can target, and also the likely benefit since it has a presence in USA also. So maybe some thoughts or some color on that part as to how we can, what is the potential market size that is available for us, and from this 26 odd million euros, where can we potentially take this over the next, let's say, few years?
Yeah, hi. Good afternoon, first of all, and thank you for the question. I think I will begin with throwing a little bit more light on who Thaletech is, what they do, and what their expertise is. So, like Himanshu already mentioned a few minutes ago, Thaletech is engaged in manufacturing of glass-lined equipment. However, Thaletech is a highly innovative company manufacturing very specialized glass-lined equipment and solutions. Thaletech has a number of firsts to its credit as far as innovations in the glass-lined industry is concerned. And I think they have been able to, so owing to this innovative approach, I think they have been able to capture the largest market share in the German market. Since all of the companies operating in this area are private companies, the exact data might not be available, but the market share is approximately 50%, slightly above 50% in the most likely scenario.
In the German market?
Yeah, as far as in the German market, yes. Which is also the largest market for glass-lined equipment in Europe. As you know, a large number of chemical and pharmaceutical manufacturing companies are located in Germany or in the German-speaking areas of Europe. As far as the market size is concerned, Europe as a whole would be, I think, between 50 and 60 million euros. That's the understanding that we have been given. This is, of course, excluding the UK.
Right. And, though it's based out of Germany, the growth in the last 2 years, the data that is available, seems to be pretty healthy. So, is there a possibility for us to, with the acquisition and now HLE working kind of in tandem to kind of expand this and maybe even a geographical expansion into some other geographies? So where would you kind of target to take this company over the next, let's say, 2 years or 5 years?
Yes, so I think the possibilities are very good in the near future. As is very evident, Saletec is currently a highly focused company, not only in terms of its product offering, but also in terms of the market it serves. So it is very, very focused on the German and German-speaking countries. We hope that with the strengths of HLE, Glascoat, and Saletec coming together, we would not only be able to expand to other geographies within Europe, but also globally. We also feel that we would be able to take the products that HLE Glascoat already manufactures and market them in the markets that Saletec is already strong in. So I think that synergy is really strong, and we hope that we will see a substantial growth in the territorial coverage and the product offerings of Saletec in the coming future.
Great. Just one last question before I fall back in the queue. So even in India, we have a sizable presence in glass-lined. Now that we have acquired this company, which you are saying has a distinct edge in glass-lined equipment, what are the likely benefits for us in terms of because we already have a capacity expansion underway in India in glass lining also, and of course in our other main product, which is ANFDs. So any tangible, let's say, benefits that we see in terms of either adding products, offering here in India for our company because of this acquisition, and any maybe tangible offshoot that can that is visible over, let's say, the medium term or maybe the near term future?
Yeah. So, of course, Saletec has a lot of products in its portfolio that currently, not only in India, but globally, a lot of manufacturers simply do not have. So I think this obviously opens up quite a few doors as far as the Indian, quite a few opportunities, I would say, as far as the Indian market is concerned. However, we should also understand that the Indian market and the Western market, in terms of the maturity and the kind of products that are accepted and the price point at which they are accepted are substantially different. So I think the journey of what products could find its way to India is an explorative one, and we will hope to maximize on whatever technologies and product offerings that Saletec has to also complement the strength that HLE Glascoat already has in India.
Great. Thanks. That was helpful.
Thank you. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah. Hello. Yeah. So congratulations to the entire team. So only one question. What is our current exports base, and with Saletec, would you be able to quantify what sort of revenue can we build up, for HLE in terms of the export opportunity? Yeah, that's my question.
Right. Thank you for the question, and good afternoon to all of you. I think the total exports that HLE Glascoat currently has is roughly about 4 to 5% of its revenue from India, which translates to about 25 crores. With the availability of the marketing and the post-sales network of Thalitech, it would be possible now to offer a lot of products from HLE Glascoat's portfolio to the international markets, because we would now have a capability both to promote, market, distribute, assemble, as well as service the products post installation. So this is obviously a large opportunity. The actual number or the actual extent to which this will culminate into sales is something that is obviously the realm of the future. But yeah, we are very confident and quite hopeful of the opportunity.
Okay, thanks. Second question is, what sort of benefits can we get out of our merger in terms of procurement of certain raw materials, and which other benefits can we have now? And how can this help in increasing the profitability of Thalitech, or maybe overall as a group?
Yeah. So I think sourcing is a very natural synergy that evolves from this acquisition. India has access, so our Indian operations, so HLE Glascoat has access not just to the sourcing markets of India, but also the sourcing markets of Asia in general. I think we can use this capability strategically to source materials for the Thalitech operations, without, in some cases, dwindling the made in Germany concept in any substantial way. And I think this will bring a substantial benefit to the operations of Thalitech. And as far as the other synergies are concerned, I think being in the same line of business in different geographies with different strengths. So just for instance, Thalitech has a lot more products to offer, while at the same time the production technology in terms of automation, machinery, and tooling is an inherent strength for HLE Glascoat. I think both of these strengths put together could result in substantial synergies, not only in the German operations, but also in the Indian operations.
Okay. So steel, the cost of steel is a lot different in Europe versus in India. So can we, and that's the biggest part of our, or maybe a large part of our raw material basket. So would we be able to capitalize anything by procuring from here? Is it possible, or we need to buy steel from Germany only?
So I think shipping steel is not the objective anyway, and in any case, steel forms about, I would say, probably less than half of the material cost. The other half is composed of a lot of value-added materials. So there are a lot of other kinds of materials that they use. So for instance, there are castings, there are forgings, there are small fabricated items. So the possibility is to source these items from a low-cost market do exist.
Okay, fair enough. Thank you. I'm done with my questions. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
Yeah. Am I audible? Hello?
Yes, sir, you are.
Yes.
So, sir, first thing, in Thalitech, out of this 26.2 million euros revenue, how much would be basically a glass line reactor revenue?
So the actual mix of the revenue in Germany, in Thalitec, not just in Germany, but in Thalitec's global operations would be roughly about between 40 and 50% is the revenue from sale of new equipment, which includes reactors, tanks, heat exchangers, and so on. And almost about 35 to 40% of the revenue comes from what is known as relining, which is a substantial business across entire Europe. And the balance, small portion would comprise of balance after sales services, spare parts, consumables, and so on.
Okay. So you are saying the 50% business is motamoti is the lining business or the heat exchanger or other part of the business, right?
50% is the sale of new equipment, and 40% is the business which is related to relining of existing equipment.
Okay. So relining meaning refurbishing, right?
Yeah, it's basically completely re-glass lining of the entire equipment.
Correct. So now, the first thing is this, in terms of the acquisition of Thalitec, what we get as a HLE, I mean, one is that we get a new market, that is understood. But what else we get from that? And because, a lot of these are glass-line reactor, I believe exporting or importing of glass-line reactor is a difficult task. So wanted to understand what was the key reason for the acquisition. Is it like new technology, new market, or what do you think?
I think. Thank you for the question. In fact, and your question to a large extent even gives the answers. So I would agree with you. Obviously, the alignment of technologies. We will have access to best-in-class technologies, and the sharing of technology between Thalitec and HLE Glascoat will obviously lead to a better product offering for both the companies. So that would be number one. Number two, of course, it opens up the territories predominantly in Europe and also to some extent in the US. The third and probably one of the largest reasons would be the capability of having an existing marketing and after-sales network, which would allow us to now actively promote and sell the filters, dryers, and other equipment that HLE Glascoat currently manufactures, but which Thalitec doesn't. So the mix of all of this put together, as well as the fact that the Thalitec even currently is quite a good, efficient, and well-run company, I think makes it an attractive proposition for HLE Glascoat.
Okay. So let me rephrase my question. Number one, as you indicated that new technology was one part, why we look Thalitec. And on the other part, you said that, there are a lot of products which we can export from India, which basically Thalitec is not having in his current portfolio, right? So
that's correct.
Two-part question. In terms of the new technology, you mean, few new products which basically we can now get from Thalitec, which were missing in our existing domestic portfolio. So if you, let's say, include that, what would be the addressable size or the market size of those portfolio or those products in the HLE, which were missing in the HLE portfolio?
Let me put it differently. I think it is not just about a couple of more products, which would be, let's say, fairly small and incremental. But I think the critical part is in the quality of the manufacturing processes and the quality of some of the inputs that we have. And that is where there are lots of things that both companies could learn from each other. So there are, for example, a simple thing like the lining of the glass. So there is a process which every company has a separate process, has a different process. And different processes lead to different end results in terms of efficiency in the production process at the customer's plant. So we are going to evaluate the best in class between us and then incorporate that so that we can have a far more improved equipment both in India and globally.
Okay. That is one. So when you say that the technology or the quality which you are going to improve, so in India, was that thing were missing earlier?
I think improvement doesn't necessarily mean that it was missing. Improvement probably means that we want to continuously improve. I would not say we were missing, no.
Okay. Second thing is like, the export opportunity you talked about. What kind of the addressable opportunity we'll be having in terms of the export? Hello?
It's a large market. I think as we have said in earlier calls as well, it's a large market. We are currently already exporting in small quantities to Europe and the US. We already have access now through this acquisition to the same user segment because Thalitech also, its customers basically belong to the agrochemicals, APIs, and the chemical industry. So I think the end user segment is common, and I think it will be a great option for us to leverage on that and be able to sell our filtration and drying equipment.
Okay. So let's say today the quantum of export is 25, whatever you are exporting today, and with this new network, like, if I say take a 4 years view, is that you can add few more products into this, and what kind of the addressable size you have the available, like, 1,000 crore, 2,000 crore now, including all this?
So the overall global market would not probably be just for filters and dryers, probably may not touch the 1,000 crore mark. So I would say probably the number is much smaller than that. Having said that, the basic constraints that HLE Glascoat always had in the past were two. Number one was the availability of manufacturing capacities, simply because the Indian market itself is extremely is growing at very high growth rates. So that was number one. And number two, of course, was the availability of the marketing and post-sales network in those countries, which is what we now get through this acquisition.
Okay. So basically, you are saying that, even few products which you are manufacturing here, now those products could be manufactured there in those facilities also. So that will...
No. Sorry. No, I don't think that was the intent. The intention was to sell the products made in India into those markets. I think the intention is not to get the same products manufactured there, but I think the idea was to sell the products. Let's say, I'll just give an example of the filtration and drying equipment that we manufacture in HLE Glascoat in India. Now, these products are not being manufactured by Thalitech currently. It would be a great opportunity for HLE to use the Thalitech network to access the same customer and user industries which Thalitech is already in touch with.
Correct. So with this cross-selling, what kind of network effect we can get? Currently the export is 25 crores. Let's say with this cross-selling opportunity and the network effect, what kind of the export quantum we can attract over a 4-5 years time frame?
So, sorry, I'd just like to add to Nilesh Bhai's answer to the previous question. So while it would be beneficial to sell a made in India equipment in Europe, I think the possibilities that exist are far bigger than that. I think the possibility to use the expertise of both the companies, again, even in the filtration and drying space, do exist. So, it could very well be achieved that basic fabrication or manufacturing is done in India, and the final finishing and fit-outs and automation is done in Europe. I think such a model would also, be a very effective way to capitalize on both the company's strengths and also to meet the customer's very specific requirements in the European markets.
Okay. And sir, my question on the export opportunity, if you can give some.
Well, I think the opportunity is very large. We today, with our 25 crore exports currently, don't even address 5% of the market. So it's a huge market there. So it will really be up to us to go out and penetrate deeper. Yeah. So I don't have a number today for you, unfortunately, but yeah, obviously the possibility of that market being considerable and substantial is huge.
Okay. So the filter and dryer would be what, 500 crore market today?
Again, you're asking me for specific numbers. Unfortunately, I don't really have those specific numbers for you.
And last from my side, sir, any scope of margin improvement in the Thalitech standalone business? Like it is currently around 9.5% kind of a EBITDA margin.
Yes, we are already seeing considerable improvement in margins over the last 2 years. So we've seen margin growth already happening over the last 2 years, and this is really happening on the back of higher volumes. So yes, there is scope for improvement in their operating margins as well. Yes.
Okay. Thank you, sir. I'll come back in.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yes, sir. Congratulations on this acquisition. And a few questions from my side. The manpower cost is supposed to be quite high in Germany with a sort of 5-day work culture and 2-month holiday in a year, whereas we are into much more hard-working atmosphere for Indian labor. So how will the gelling happen? And second question was about how do we improve the margin side? Because the margin, I believe, is quite less for Thalitech processors in India. So can we improve it with our lower labor cost in India and somehow amalgamate that, and that helps us both the companies? Thank you.
Good morning. Basically, I would like to say that, first of all, yes, the labor cost per person is high, if you count it that way. But at the same time, the productivity here is also substantially higher. So direct comparison of a person-to-person cost may not be the right way to compare it. In any way, Thalitech positions itself as a made in Germany company. That is what has made it successful, very successful, in fact. They are proud of it, and that is one of the main selling points for them, which has made them successful. Yes, there are many ways, despite the labor cost and being high here. There are many other means of rationalizing the costs, and we will basically go about implementing those other things right now. So I hope that was the first part of the question. What was the second question you asked?
Margin improvement.
Yeah. So I think, so margin improvement, labor cost is one aspect, but there are many other avenues which are available already. We can see them, and we will go about implementing them to improve the margins.
Okay, sir. And basically, can we now sort of get at least, or just sort of a duopoly market wherein our main competition, thanks to that Toddler connection and other Swiss connection, is able to get premium pricing, and so we can also expect our pricing part to improve, number one. Number two, the FDA approval also sort of for our clients in pharma or other sectors also might come more easily thanks to the Thalitech stamp of high quality, and that sort of growth expectation also increases for us in India.
So I don't believe that any kind of pricing premium is enjoyed by any manufacturer, at least the top or tier A glass-lined manufacturers in the Indian market. Having said that, I think with this acquisition of Thalitech, we do aim to continue our philosophy of providing the customer innovative solutions to their very specific process needs. I think Thalitech and HLE Glascoat have a very common philosophy in that regard, where we pride ourselves for working very closely with customers and understanding their exact process needs and then coming up with solutions. So, while it would be it's unfair to say that all of the products and innovations being offered by Thalitech in Europe could be a direct fit for an Indian customer, I think solutions that are cost-effective yet innovative could also be evolved. So I think the spirit or the idea is that we will continue to work closely with our customers, and we would try to offer them solutions, ready solutions that fit their needs, or develop solutions that fit their needs. So that's the idea that we are working with.
The last question is regarding slightly long term. Basically, now India seems to be the manufacturing hub for glass line equipment and filtration other equipment, thanks to the lower manpower cost and more big capex happening in the pharma, agrochem, API sector. So the demand is also large. So this is a sort of a long-term story wherein manufacturing is bound to shift to India, and it becomes a very attractive acquisition, and that Taletech acquisition becomes very attractive in terms of getting high-quality products and slowly imbibing the technology, improving our products and perception in India. And how is the opportunity size looking like right now for India, China plus one, or China blue sky policy? Anything which you'd like to have, or the CAGR expected for the sector in time to come? Thank you.
So yes, as you very rightly said, the opportunities in the Indian market are big right now. The future for our user industries, or rather our user segments, look good. There are strong tailwinds, and we expect the market to continue growing for at least the near visible future. I think as far as the Indian glassline market is concerned, we will kind of have our hands full. It will be our endeavor to meet the existing user demand and cater to the requirements of our customers. As far as the reduction of manpower cost is concerned, in India we are continuously engaging in projects and operational excellence initiatives that help us not only control but also control costs, but improve efficiencies. And I think that will continue to be our endeavor, and we keep on striving to improve the margins.
Thank you, sir. Keep up the good work.
Thank you. Thank you so much.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Sameer Desai from Phillip Capital. Please go ahead.
Hello. Yeah. I just want to check up with you. Taletech, besides engineering activities as a group globally, what are the other interests they have? Any other businesses, do they have any interest?
I don't think they have any other interest. So that the Taletech is basically founded by two gentlemen who hold the entire 100% stake shareholding in the company currently, and other than Taletech, they have no other business interests.
Okay. That was it. Thanks.
Thank you. The next question is from the line of Saket Reddy from Paulson Enterprises. Please go ahead.
Good afternoon. Am I audible, sir?
Yeah. Yes, you are.
Yes. Yeah. So I've just gone through the investor presentation. In the table that has been given for the financials of Taletech, we've seen that Taletech does 21x fixed asset turns, and we HLE in India do like 4 to 5x. So can you explain, sir, what's the difference between Taletech and HLE, or any German players asset turns, they having such high asset turns?
So there are two main things. One is, of course, Taletech's asset block is relatively depreciated, and hence their net block of assets as reflected in the books is considerably low. Number one. Number two is, of course, the breakup of the revenue profile, which I just mentioned, almost 40 to 45% of which is coming from relining and supply of after sales and spares and so on. So I think both of them put together probably account for a much higher asset turn. Compared to that, in India, if you see, a lot of expansion and investment in new assets has been happening over the last 4 to 5 years. So a lot of the asset block which appears in the books is relatively new, and hence it's at more current prices and current values, which is the reason why the two asset turns are slightly different, yes.
Right. And my last question is, sir, you mentioned the market share number in the German market for Calitec. Can you just repeat that?
Yes. So the market share is in excess of 50%.
15 or 50, sir?
50.
50.
Yeah. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Absi from ABN Company. Please go ahead.
The share price has increased from 3,500 to 6,500 from August and onwards. Announcement of acquisition was made to exchanges on 17 September when share price had started increasing from end of August. So can you comment on insider trading?
Followed all the insider trading guidelines, and we are very, very sure that there has been no insider trading. In fact,
So then one of the things that you may have noticed
is that the company has of its own, suo moto, included a trading window closure, which is not even required by regulation. So yes, the company has the highest standards of corporate governance in that regard.
I hope there is no insider trading because everybody is commenting on that. Thank you very much.
Thank you.
Thank you. The next question is from the line of Amit Khandelwal from Sycamore Advisors. Please go ahead.
Good afternoon, Himanshu bhai, Alav and Nilesh bhai. Congratulations on this wonderful deal. I had a question to understand in the addressable market that HLE and the acquired company together will have, what kind of competitive edge and what kind of competitive landscape exists, and to that extent, what is the combined entity competitive edge in those markets? Thank you.
Hi, good afternoon. So I think it is very clear that both the entities put together will have a substantial competitive edge, not only in terms of the product offering. So like we have said several times, Calitec has, to its credit, several industry firsts and several unique products. And I think being the innovative company that they are, they will continue to lead the industry with innovations even in the time to come. So I think apart from this being an inherent strength, I think the ability of HLE Glascoat to optimize manufacturing and bring about production efficiency really opens up the opportunity to do much more in the German, European, and the global market. If you have noticed, I think the manufacturing facility of Calitec is quite large, and the possibility to add production volume and different products, is substantial. So, having said that, I think we feel that there is good opportunity for Calitec to grow in the global space.
Thank you and congratulations once again.
Thank you.
Thank you. The next question is from the line of Anupam Agarwal from Lucky Investment Managers. Please go ahead.
Yeah, hi sir, good afternoon and congratulations on the deal. So my question was firstly on the market. If you could highlight how has the market grown, our German market over the last 3-4 years, and how much have we grown over that same period? So basically, we have a market share of about 50-55%. What was that 3-4 years back?
So I think over the last decade or so, we are all aware of the general growth trends in the European market. The growth trends will obviously not be comparable to what we have seen in India. However, over the last decade or so, Thaletic has been able to not only double its revenue, but also it has been successful in becoming a market leader in the very specialized glass line equipment business. Even over the last couple of years, the company has grown to the tune of approximately 10% year on year. And with these added synergies and strengths of the combined entity, we hope not only to continue, but hopefully improve on this growth rate.
So Thaletic has grown at 10%. How much would you say the market has grown, the German market specifically?
The German market would have grown in single digits. The German market growth is in single digits.
Right.
I think the growth rate.
Yeah, go ahead, please.
I'm sorry. So I think the growth rate is well below 5% for the market as a whole.
Okay, understood. So secondly, just wanted to understand, we paid about 12 million euros. What would be the payback period for HLE combined entity going forward? And what is the kind of ROC profile that Thaletic has currently, and can, at optimal utilization of the plant, like you mentioned, there's enough scope for capacity expansion. At optimal utilization, what will be the ROC profile of both of either Thaletic separately or combined entity for HLE and Thaletic?
So on a simple straight line method, as Himanshu mentioned, the enterprise value to EBITDA multiple is at around 5 currently, and the business is growing. Even assuming just the current rate of growth without any incremental support from HLE Glascoat, we believe that this would be a payback of about 3 to 3.5 years for the investment. I think that's really what we are. Obviously, we hope to do better, and it's not just a financial parameter that we are really looking at. To have this capability to expand globally. So as we said, territorial coverage and also expanding the portfolio of products that could be made available in that territory. So I think it's the combined capability of doing all of that which makes this very exciting for us.
So is it fair to assume that post utilization and post synergies, Thaletic ROC profile will be similar to HLE business currently?
Based on its current financials, their ROC, ROE profile is already similar to what HLE reports on a regular basis.
Okay, fair enough. Got it. Thank you, and congratulations on the deal again.
Thank you. Thank you.
Thank you. The next question is from the line of Kaushal Shah from Danki Securities. Please go ahead.
Yeah, thank you for the follow-up, sir. So if you can, share the current year numbers, is it possible for you to share maybe the half-year numbers for the current year? Meaning, are they on track to grow at that same 10% numbers? And the second question was on the capacity utilization. I heard, there was a mention that they have a large manufacturing space.
Yes.
So if you can share maybe some on the utilization level, meaning do they have that the utilization available to ramp up operations from here on?
Okay, so obviously we do not have audited numbers available for the current financial year, but based on the management data and the unaudited numbers, we are seeing top line growth in the first 7 months in excess of about 15% on an annualized basis, and operating profitability growth of about 20% in the current year. So the current year so far looks very promising.
Great. Okay. And about the utilization?
Hello. Yeah. So I think as with the job stock environment that we are used to in India, utilization is a function of multiple parameters. Having enough floor space is just one tool or one means to an end. I think as the company continues to grow, we will aim to continue to have more and more skilled and trained people to execute the larger volumes. Having said that, I think having enough floor space does enable us to do that faster than if we would have to make an expansion in terms of a brownfield expansion.
Okay, great. That helps. Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Himanshu Patel for closing comments.
Thank you, gentlemen. I take this opportunity to thank everyone for joining in on the call. I hope we have been able to address all your queries. In case you require any further details, you may please contact us or Mr. Deven Dhruva from Orient Capital. Thank you.
Thank you.